Well, first of all, so what? Right? I mean, it's no big deal. Gold is at 5,000. The Dow is worth less than 10 ounces of gold because the Dow is under 50,000 and gold is above 5,000. So the Dow is worth less than 10 ounces of gold. When Donald Trump was sworn in, the Dow was worth more than 16 ounces of gold. So he's bragging about the Dow going up. You know, it was at 44,000 when he was inaugurated. So, you know, it's been over a year, 6,000 points on the Dow. I mean, that's nothing exciting. But priced in gold, the U.S. stock market is down about 40% since Trump was elected. That's a disaster. That's one of the worst showings ever. I mean, I haven't done the research, but it's very unlikely that we've ever had a president where in the first year that he was president, the Dow dropped 40% priced in gold. Right? If you recall my last gold market wrap, my prediction is that the gold and silver mining stocks are going to hit new highs before gold or silver hit new highs. And I still think that's going to be an accurate forecast. Gold at 5,030, to me, there's minimal risk. I don't think gold goes much below 5,000. In fact, every time it's gone below 5,000, it's quickly got back above it. Gold, to me, is acting now around 5,000 the way it acted around 4,000, the way it acted around 3,000. It just builds a new base and then makes new highs. The good thing about buying gold now at 5,000 is that we were above 5,500. So you have a 10% correction from the highs. That's a great entry point. And I think you're buying near the floor. So if you want to buy a precious metal where you're probably not going to be down much at all, if we get a sell-off, you buy gold right here. But remember, these stocks are still cheaper now than they were before they tripled because of the impact on their profits from the rise in the price. But remember, Wall Street never believed the rally. The whole rally from 2,000 to over 4,000, even 5,000, happened while Wall Street was skeptical. If you remember, there were major downward revisions. Wall Street firms put sells on Newmont and Barrick when gold was at 2,000 because they said there was no more upside in gold. So why own the miners? Well, there was tons of upside in gold. They just didn't understand that, and they still don't understand that. They still think the prices are going to come down.
Peter Schiff says ignore the media's silver bubble lies. That $11 crash? A shakeout. Silver broke 1980 resistance. Mining stocks will Shingao before metals. Dow 50,000? Down 40% in real money since Trump. Inflation rising. Tariffs hit you. Fed hawk talk equals cover for cuts. Buy gold and silver this weekend.
The Federal Reserve Bank in New York just did a study on the tariffs to find out who's paying them, right? And their study concluded that 90% of the Trump tariffs are paid for by Americans, American consumers, American businesses. And maybe 10% are being absorbed by producers. Now, you didn't need a study for that. I mean, this is basic economics. I mean, it's almost not even economics. It's so simple. It's like common sense that the taxes are paid by the consumer. And of course, the longer the tariffs remain in effect, the more of the burden will get passed on to the consumer, right? So ultimately, 100%, even if the consumer is not paying 100% of it yet, if some of it is being absorbed by the U.S. companies and some is being absorbed by foreign manufacturers, ultimately it's all going to land on the consumer. If the Trump administration and all their economists can't figure out something so simple is how tariffs work. I mean, what about the more complicated economic stuff? I mean, they don't have a clue or a chance there. I mean, our government is being run by a bunch of economic ignoramuses. Either that or they're just lying. And again, all this talk about Kevin Warsh being some kind of hawk who's going to swoop down on the Fed and start jacking up rates, this is all nonsense. They're all laying the foundation so that when he starts cutting rates like a madman, Trump could say, well, this is not my doing. This is his own judgment. Remember, this guy's a hawk. He's a tough guy on inflation. And if he's cutting rates, well, it must really be economically justified. It's got nothing to do with politics. Of course, it's got everything to do with politics. This was not good news on inflation. I don't care how the media is choosing to spin this. Inflation is still high, and it's going higher. The U.S. stock market is about the worst performing stock market in the world since Trump's been president. Now, obviously, I haven't looked at every single foreign market, so there could be some, and there probably are, that the U.S. beat. But the vast majority of stocks, look, my foreign dividend payers fund, which just invests in a portfolio of dividend-paying foreign stocks, was up 62% last year. That was like triple the S&P. It's up better than 13% this year. The S&P is up like 1%. And, all of the foreign stocks are outperforming. The dollar is down on the year. Down. The dollar hit a record low against the Swiss franc. If money was pouring into the U.S., the dollar would be going up. Because if you're a European and you want to invest in the U.S., you got to convert your euros into dollars to make U.S. investments. There should be demand for our currency if all this money is coming in. It's not. In 1999, the Dow was worth over 42 ounces of gold. Now it's worth less than 10. It's down over 75%. It's been going down in real terms, regardless of which party had the White House. Obviously, when you have silver swinging $10 in 10 minutes, right? I mean, there's a lot more volatility. I think the support in silver, though, is around 70, the low 70s, not even 70 even. And so if you buy it now at 77, maybe you got 10%-ish downside risk realistically. Not that bad. Plus, I think the spreads on silver coins and bars are going to keep widening. So I think the sooner that you can get in, I think 77 is still not bad. When it was down at 74 last night, I was on X saying, hey, buy it right now, 74. Seemed like a pretty sweet deal. And what I have noticed, by the way, when it comes to silver, is the prices that you'll see on the Schiff Gold website are several dollars lower than most of our legitimate competitors, right? I'm not talking about the companies that rip everybody off, but the other legitimate companies that have decent prices, fair prices. Our silver bars and coins are a lot lower now compared to them than they used to be. And I think what's happening is our competitors are, using the volatility to really increase their prices. We haven't done that. I mean, the prices are a little higher only because our wholesale prices are a little higher, but we're keeping our markups about the same. So you really save quite a bit of money right now if you buy some silver in particular from Schiff Gold rather than from some of our competitors. So I would encourage that. I do expect another big rally in Asia. It seems like that's where the buying comes from. The big sell-offs mostly happen during U.S. trading hours, right? Not during the Chinese hours. I mean, once in a while, yeah, but mostly it's happening in our time frame and generally middle of the week, right? Wednesday, Thursday, Monday, Tuesday, typically up. So I think you buy, again, if you want to buy a metal and not have to worry that it's going down, just buy gold. If you buy some silver and you're worried it may drop $5 or $6 10 minutes after you buy it, or who knows, then, you can buy more. Average in, and if you're worried about the market going down. But I think the key is to load up, but in particular, too, on these mining stocks. We had great earnings that came out of Agnico Eagle earlier today. Stock was up, 5% or so on the day, but didn't make a new high. We're about workers earning more money and getting better. Okay, well, if it's really about Main Street, why does he keep talking about Wall Street? Why are they fixated on 50,000 down if that's not their goal? If their goal is to help Main Street, they should be worried about the problems on Main Street, because there are a lot of people on Main Street that don't own the Dow, right? They have a lot bigger problems. But no, I think the only reason that the president is hanging his hat on the Dow is because that's really all he's got. The economy is weak. I went over the jobs numbers already on my regular podcast on Wednesday. So I'm not going to go over it again. Make sure and go watch that video or listen to that. I went over not just the number that we just got, but the significant revisions that we got to prior years, because those were far more important than the meaningless numbers that we just got, which of course are going to be revised down multiple times over the next several years. But we have a weak labor market. The only thing that's strong is inflation. Now, we got inflation data out today that I'm going to talk about because the media spin and the Trump administration spin is that this is good news, that the CPI that we got today is good news. Why is it good news? It's good news because it's better than estimates. Well, who cares? The estimates were, way above 2%, and we came in way above 2%. So the consensus estimate for January CPI, and again, remember, the CPI dramatically understates what's going on with prices anyway, so it's irrelevant in reality. But the estimate was 0.3% increase, and we got 0.2%. That was the beat. This is what everybody is excited about, that prices only rose 0.2% in January. Well, if you annualize that, that's 2.4. I mean, that's 20%, 40% above 2%, or 20%, right, above 2%. It's not, how is that good news when the Fed's target is 2%? Year over year, we're at 2.4%. Now, that's a little bit better than the 2.7% year over year we had in the previous month, but it's still well above the 2% target. But here's where it gets worse. The core, which is supposedly more important than the headline number, the core was up 0.3. Yes, that's what they expected, but that was 50% higher than the 0.2 in the rearview mirror from December. But if you annualize 0.3, that's a big increase. That's 3.7% annualized. That's better than the trailing year over year of 2.5. But that shows that we're going in the wrong direction. 0.3 is a big number, and it's probably going to get bigger. But, even at a 2.4% year over year CPI, 2.5% core, we are as much above 2% or further above 2% than we were below it for most of the years where the Fed had interest rates at zero and was doing quantitative easing. So it was such an emergency when inflation was 1.6, 1.7, because we weren't 2. It was such an emergency that we didn't have enough inflation, that the cost of living wasn't increasing fast enough for the Fed, that they had to put the pedal to the metal. They had zero rates. We had all this QE to try to get inflation from 1.7, 1.8 up to 2. But now that we're 2.5, we don't have any of that kind of aggressive policy. In fact, they're cutting rates. The only relief we're going to have is as the tariffs go away. The only good thing that Trump can do to help the economy is remove some of the tariffs. And then, of course, he'll try to claim credit for that, right? When it's like, I've said Trump is punching us, and then he stops punching us, and now we have some relief. You say, see, look at what I've done for you, right? You feel a lot better now that I'm not punching you anymore. But the problem is that he was punching us in the first place, and if you stop, you can't really claim credit when you are the source of the problem. But I think as we get closer to the midterms, there may be some added pressure to remove some of these tariffs so that the public doesn't have to pay them. But, there's going to be a lag because a lot of the stuff that's tariffed, once it's brought in with the tariff, even if you lower the tariffs going forward, they've still been paid by the importer. They still have to be passed on to the customer. So it may be too little too late to try to provide some relief by removing the tariffs. And of course, Trump is going to try to send out these tariff dividend checks as if, we've got so much money pouring in from tariffs that we can pay dividends. Now, yes, the tariffs are offsetting some of the bigger deficits that were created by the big, beautiful bill, but not enough. We had these big tax cuts, no tax on tips, no tax on overtime, no tax on Social Security, right? Keep hearing that. Increases in government spending, entitlements kept going up, welfare, military spending going up. So the deficits went up. They can't really blame the inflation on Biden and his deficit spending. I mean, sure, that's part of the problem. But when they make it worse, when they have an opportunity to cut back some of the Biden-era spending, but they don't do that, in fact, they preserve all that spending and then add to it, how do you blame Biden when you're doing the same thing? You're doing it even worse. It's a convenient scapegoat, but it's not going to work very well in the midterm elections. I said before, and I'll say it again, you don't win elections by lying to the voters about how great the economy is and promising more. Because when the economy is bad and the voters know it, that's the last thing they want to hear. It's much better to be honest with the voters about how the economy stinks and then lie to them about how you're going to make it better. That's how every election has been won the last three. The party that's not in power wins. Why? Because the party that's in power has to claim the economy is good, and they look like fools to the voters. The party that's out of power gets to acknowledge how bad everything is, blame it on the party that's in power, and claim that they're going to fix it. And, that's a winning message. That's better than everything is great, so, you're wrong. So, get used to it, deal with it. No, the voters want to be told, I feel your pain. Yes, the economy is bad. And it's the current party's fault that it's bad. They're trying to get you to believe that a bad economy is good. Don't believe them. I concur. Feel your pain. And we have the policies. We're going to make the economy better. So at least there you're holding out hope.